Sanford homeowners, Sanford home buyers, this is the market update you're going to want to hear. If you're someone who sees national news, real estate headlines, and wonders how is that going to affect the Sanford market? How's it going to affect the house I want to buy or sell here locally? Then this is the one that's going to give you the data, the insight to make strategic decisions for your real estate move. What if I told you that we were in a time where as a buyer, you could take advantage of huge seller incentives, whether it's new construction builders offering big incentives or sellers willing to pay closing costs for you to help with 2-1 interest rate buy downs or reducing your cash to close that's needed to purchase a home? And what if I also told you that nearly half of the homes that are selling in Sanford, if you are a seller in the market, are still selling above asking price and are going very quickly? The market is still moving fast for those homes that are prepared appropriately and promoted appropriately, which we will touch on later. This is the market update where we're going to give you the data and insights that you need to make good decisions. So let's dive into it. So we got October 2023, and the first thing a myth that's out there right now, and that is that foreclosures are increasing. Now, first off, this is true. Foreclosures are increasing from 2020 and 2021, and the headlines are saying there's 150% increase in the amount of foreclosures from just a couple years ago. But it's not fair to make that comparison without giving everybody some context, because foreclosures weren't happening in 2020 and 2021 at a very high rate or almost non-existent because of the forbearance programs out there preventing foreclosures from happening. If we take a look at this graph, you'll see that foreclosures peaked in 2007, 2009, in that time frame, because leading up to that, we had a big rush of real estate that was fueled a lot by, lending standards that were allowing borrowers that really shouldn't have been qualified to purchase multiple homes, not even just one home. And so that led to a whole bunch of foreclosures hitting the market. Right now, the lending practices are still tight. And although foreclosures are up from 2020 and 2021, we'd expect them to be because they weren't allowing foreclosures. They're still down from 2019, 2018, 2017, all the normal real estate years. And that's kind of the theme of this whole market update, is that we're getting back to normal, right? It hasn't been normal for a while. It wasn't normal in 2021 when prices went through the roof, and we're getting back to a normal real estate market. These are lending standards, and this is a graph showing that, in 2008, when the market crashed, it was led by lending standards. This is a measure showing, how lending standards were affecting, borrowers' capabilities to get a loan. And you'll see that after that, there was some legislation that was put in place to make sure that we didn't end up in this situation again. And those lending standards have remained relatively steady over the last 15 years. So I really don't think we're going to end up in a foreclosure crisis, or we're going to have a lot of foreclosures hit the market. So, and why are people even talking about the foreclosures anyway? It's because of how it affects inventory. That if too many houses foreclose at once, inventory levels spike. Now there's too many houses, not enough buyers, supply and demand takes over, and that it results in home prices coming down, because now, all the sellers are fighting for the buyer's attention. So let's talk about inventory. Here in Sanford, inventory has pretty much followed the national trend line, right? That we saw inventory start to creep up in September 2022 when the interest rates started going up, and we expected that to happen some. We saw it dip back down in April and May because we have more home sales happening during those time periods in spring. That's normal. That's a normal real estate market cycle, which we will talk on later. And now, after the summer months, we're starting to see inventory levels rise again, which again is normal. And we'd expect these inventory levels to rise and continue to rise going into the first quarter of 2024. But let me tell you something that maybe this graph doesn't show you, a little bit deeper information. And I'm going to pop out of my slideshow, and I'm going to go to the Sanford real estate market. And we're looking at houses that are for sale, houses and manufactured homes. There are 343 homes on the market right now in Sanford. This is as of today, October the 18th. When I go in here and I add one little filter that says I don't want any new construction to show up, so I'm going to put 2022 as the nearest year built. It takes it from 343 down to 134. We got rid of 209 listings. So of the 343 homes on the market right now, 209 of them were built in 2023, or in other words, are new construction. A big chunk of those listings aren't even ready to be moved into yet. They're just a lot with a plan that you can purchase, go under contract, start making your selections, but you can't move in right away. So a lot of this inventory that we're seeing, the rise, is actually kind of false inventory, and it's a lot of new construction. The resale inventory has remained relatively constant, which has helped. Since buyer demand is lower because of interest rates, there aren't as many people buying homes right now. It's helped buoy the market and keep home prices steadily appreciating. So we'll jump back into the slideshow here real quick and talk about, this is a quote from Jeff Tucker, the senior economist from Zillow. What we didn't expect, especially considering 7+% mortgage rates, was more new listings to hit the market. And why is that, right? I'll talk about that in a second. But the reason that he's saying that is that this is the trend line, 2017, 18, 19, 20, 21, 22. You see all in this kind of bunched together, right? And outside of 2020, when the pandemic hit and the market had to react, this trend line is pretty consistent, right? That we see new listings, the amount of new homes that hit the market tick up in the spring, right? That's the highest time, the highest amount of listings that hit the market. And then the amount of new listings dwindle off throughout the course of the year before it starts to pick back up again in January and February. That's normal. That's what we're expecting to happen this year. What's interesting though is that instead of just trending down, we have an uptick in August with the amount of new listings. My opinion is that this is a lot of the builders putting a lot of listings on the market right now. That I still don't think there are a lot of resale, homes that are being listed unless people have to move. The new listing count for Sanford, as you can see, dipped down September, started dipping down September of last year, steadily climbed up through the spring, dipped down a little bit, and then we are remaining relatively constant with the amount of new listings that are hitting the market here in Sanford. So the market is healthy. Right now, to talk a little bit about why people aren't selling their homes and why a lot of people are choosing not to move, is because there are 70.7% of the homes owned in America right now have a rate less than 4%. And it's a big sticker shock for somebody who has a home at a 3% mortgage rate to go and buy at a 6.5% or 7% mortgage rate. It's a big jump. So they're not listing their homes for sale. They're not moving unless they really have to, right? Unless they really have a circumstance where they just are outgrowing it, or they got a new job offer, or something's changed making them move. This graph will show you that, people that are in the red here, under a 3% mortgage rate, they're almost assuredly not selling, right? 3 to 4%, probably not selling. If you're in the 4 to 5% range, you could get to 5% right now with a 2-1 buy down. So you might think about selling, but you got to think pretty hard. And so the amount of people who own homes that are thinking about selling, in the probably or yes range, are the ones that have above a 5% interest rate, because it's not all that different for them right now to buy. So that right there is what's keeping inventory levels in check, that people aren't rushing to capitalize on all the equity they have. And we're going to talk about that right now, because that's another theme of this market update, is that people are sitting on tremendous amounts of equity. And if I could have one hope for some of the home sellers out there and the home buyers, is to give you some information and insight on how this home equity that's been built, this tremendous amount of equity that's been built up over the last few years, and the tremendous amount of equity that's going to be built over the next few years, how you can capitalize on that and use it, and use real estate as a way to build transformational, generational wealth for you and your family and the future of both of those parties. So right now, mortgage rates are less relevant to older homeowners, right? So what this statistic, and I'm throwing this in here, is because I think that there's going to be a trend over the next decade or so that older homeowners are less sensitive to interest rates for a couple of reasons, right? Of the people, 26% of homeowners, 43% say it's because they would not need a new mortgage. About 1 in 4 U.S. homeowners say high mortgage rates would not impact their decision on when to sell their house or when to buy. And the reason is because this older generation, baby boomers and Gen X's, that have owned their houses for a long time, they got a ton of equity. They can sell their house and maybe buy cash, or they can sell their house and put half down on a house. And so interest rates just don't impact them as much. And I think that that's beneficial to know, because if you have a house that could be catered to this generation, you can bring in really strong offers. And so houses like ranch houses, single level homes, these I think are going to be in really, really high demand over the next 5, 10, 15 years as the baby boomers and Gen Xers age in place, and they want single level homes. They want to downsize. They want to move and be closer to their grandkids. I think these ranch style homes are going to be in a super high demand going forward. So let's talk about current home price appreciation, right? What do we expect for where home prices are headed over the course of the next few years, so that if you're buying right now, you can feel assured that you're making a good investment, okay? This is a quote from Nicole Friedman, reporter at the Wall Street Journal. Home prices aren't falling anymore. The surprisingly quick recovery suggests that the residential real estate downturn is turning out to be shorter and shallower than many housing economists expected after mortgage rates soared last year. In a nutshell, a lot of people expected the market to crash or dip a whole lot when interest rates rose, when they doubled, and myself included. I figured it would have a big impact. But what we found is that although, yes, buyer market was impacted, less buyers in the market, because what we just talked about, also less sellers, kind of just balanced each other out. And so there wasn't this big dip. John Mack, senior research analyst, John Burns Consulting, from January through August, housing demand stabilized, resulting in relatively stable home prices. By August 2023, national resale home prices fully recovered from the declines experienced in the second half of 2022 and now exceed their April 2022 peak. Overall, it appears the reduction in supply has outweighed the decrease in demand. Thus, house prices have started to increase even as sales have fallen. Here are percent change in home values month over month over the last 18 months. We saw that there was a dip, when interest rates went up, but now home prices are starting to appreciate again. And here in Sanford, these dips were even smaller than this, hyper locally. This is a national statistic. Percent changes in home value by Zillow, Black Knight, Freddie Mac. All of the same, right? That we had a small dip and now we're back on the up and up. Home prices are going up again. Month over month appreciation. So just from last month, we're seeing home prices appreciate even just from September 2023 to October 2023. And here in Sanford, these are local stats. Blue line is the local Sanford market. The orange line is the national market. We see here that, we had prices dip pretty significantly. The average home price, new listing price, dipped pretty significantly in June. But again, the data doesn't tell all the story here because we have some national builders in our backyard, D.R. Horton, Smith Douglas, Adams Homes, big national and regional builders who are relatively new to the market. D.R. Horton and Adams Homes and McKee Homes especially, new to our market. And they're trying to figure out what price they should be selling houses for here in Sanford. So a lot of them, they started pretty high. They listed houses in the high 300s, low 400s range. And if you've been watching Zillow or watching these prices, a lot of these new construction builders have been doing $25,000 price drops on their inventory because they weren't selling in the higher price per square foot ranges that they were used to seeing in Raleigh. And so they're having to cut those prices a little bit. I think that that's what's behind this data, right? And why this has bottomed out a little bit in June, July, August, that these builders are starting to adjust to what's going to sell here in Sanford. And then we saw it start to increase again. So equity, we talked a little bit about this. This is the difference in how much you owe on your house, how much it's worth, and you could sell it for. Right now, the percent change in home prices over the last 5 years, as of the end of the quarter 2, 2023, you'll see that 75% home equity gain over 5 years. When we go back to 1991, talking about those baby boomers and Gen Xers, 309% average home price change in the years from 1991 to 2023. Americans are sitting on tremendous amounts of equity. The dark green here are people that either own their home outright, no mortgage at all, or own with more than 50% equity. And that makes up almost, over 2/3 of all the homes owned in America are either paid off or 50% or more equity positions. People have a tremendous amount of equity. Another reason why I doubt we're going to see many foreclosures hit the market. And even of the remaining 31, 32%, 20.8% of them have 30 to 50% equity. So people are sitting on big piles of cash within the homes that they own. Quarterly gains, just in the last quarter, average U.S. household gained $13,900 in equity, right? Added right to their bottom line of their net worth. 3 major advantages to having equity real quick, and you can read the slide, you can pause it and read here, but the ability to use some of that equity to buy down your interest rates. If you're a homeowner and you're gonna net $130,000 when you sell your house, who's to say we don't use $20,000 of that to buy you down to a 5% interest rate permanently, or maybe buy you down to a temporary interest rate that's under 5% so that you can buy right now without having to be so impacted by 6, 7, 8% interest rates. The ability to give a larger down payment. Those baby boomers, Gen Xers, and even some of the people who purchased houses here in the last few years, you can knock a big chunk of the principal balance of that new home off by taking the equity and then putting it as a down payment on that new house. and the ability to strategically reallocate that equity for future wealth building. So another strategy, right now, is that you could stay in your current house, pull out some of that equity in terms of a cash out refi or a home equity line of credit in order to purchase another home, a second home, an Airbnb, an investment property, a vacation house, so that you could capitalize on all of the appreciation that we are expecting over the next 5 years. You could also use it to purchase your next house and then save a chunk for that second investment. So those are 3 major advantages to having that pile of equity that most homeowners are sitting on right now. Because again, to touch on this twice, future home prices are expected to appreciate nationally. What do you think is going to happen here locally in the Raleigh and the surrounding markets where, right now more people are moving to North Carolina? The net of our population gain is the highest in all of America. We have the highest net ratio in America right now of people moving to versus moving from North Carolina. So what do you think is going to happen with home prices here hyper locally? On a national scale, we expect that home prices are going to trend up through the end of the year, but just barely, just like it is seasonally. This is the 49-year average. That most home price appreciation happens in the spring, tapers off into the winter months. Right here, Home Price Expectation Survey, a nationwide panel of over 100 economists were asked, where do you think the home prices are headed over the next few years? And the average of all their responses is summarized in this graph. So 2023, the national average expecting home prices to go up over 3%, 2% in 2024, continue to go up through 2027. So for the next 4 or 5 years, they're expecting nationally home prices to continue to appreciate. I've already told you here a bunch of times, I say it all the time, real estate is hyper local. In the Raleigh market, Sanford market, our surrounding market where there's huge job growth, huge population growth, we're probably going to outpace these numbers. I would not be surprised to see 5 to 10% year over year growth for the next 4 to 5 years. And you can capitalize on that huge right now. So how do you use all this data? We got a lot of data. We're entering the 20-minute mark. Appreciate if you stuck around with me until now. But should I move now or should I wait? How do I take advantage of all this? Should I move now or should I wait? Again, showing you home price appreciation. This is why I think you should move now. You should buy, because you buy a $400,000 house now, we have 5 to 10% appreciation over the next 5 years. You're going to add a tremendous amount of wealth, tremendous amount of equity. It's game-changing, economics that are going to be happening by you just purchasing that house and it going up in value over time. Mortgage rate projections right now are expected to come down through 2024. Now, I will tell you this: if you go ask the guy at McDonald's, he probably had where he thinks interest rates are headed and when they're going to come down. He's probably going to be about as accurate as your experts. No one really knows exactly when they're going to come down, but the general consensus is that they come down throughout 2024. And these are conventional rates right here. So your VA, FHA rates are going to be a little bit lower than that. So they're expecting interest rates to come down over the course of the next year. The problem is if you wait on interest rates to come down, home prices are going to be more, right? So you're going to pay more, but you're going to get a lower interest rate. They're going to wash each other out. It's going to be about the same. So the big question you need to ask yourself is, do I wait, and pay more for the house just to get the interest rate? Or do I work with a strategic advisor right now who can help me execute a strategy of a 2-1 buy down or an interest rate buy down to have a lower interest rate now and buy before I miss the boat on home prices going up, because they are probably going to go up. So how do you capitalize on today's market? What's the action that you can take right now to capitalize on today's market? Again, same graph. Home prices are going up. I think you buy now. I think if you're selling, the first question you got to ask is, do you want to move? If you own a home right now and you're thinking about selling because you need to move for family reasons, because you need a bigger house, because you want a smaller house, you want a nicer house, now's the time to make the move. Because right now, you could do a 2-1 buy down and have an interest rate 5%, maybe even a little bit lower, for a year, giving yourself time to refinance, right? Those 2-1 buy downs are strategic right now, and sellers, builders, are willing to pay for these things on your behalf in order to get you to buy their house. So those new construction incentives are huge. We just had a builder reach out to us and saying they're giving a $25,000 credit for closing costs or upgrades. That's a huge chunk of money that you can use to buy down that interest rate, get the upgrades that you want. Right now also, I mentioned this early in the video, that 31 homes were sold under asking price last month. 15 homes at asking, and 13 homes over asking price. So what does this tell me, right? Is that as a buyer, we can look for a deal. We can look for a seller that, we can ask for a bunch of closing costs on or a price reduction on. As a seller, we can market and prepare your house and be one of the 13 that went above asking price if we approach this correctly. You can have your cake and you can eat it too, right? And homes are still selling fast. 45 out of, there's only 17 homes that took more than 30 days to sell. Other 45 homes in Sanford sold under 30 days. And this is all Sanford listings. So homes are selling quickly. You could take advantage of these statistics and capitalize on being a buyer or seller in today's marketplace. What's the next step, right? If you're a buyer, reach out to us, comment below. Our phone number, our website, our social media links are all going to be in the comment section of wherever you're watching this. You can also, if you are a homeowner, what you really need is a professional equity report, right? Zillow can be way off. The last, before and after we took of a Zillow's estimate was 285 is what they said it's worth. We sold the house for 350,000. Don't rely on these algorithms to tell you how much your home is worth, but even more important than how much it's worth is how much equity do you have, how much money are you sitting on. And so we'll do a professional equity assessment report for you for free. You can drop us a comment, shoot us a text, send us a message, however you want to get a hold of us. We just need your address and we can get that professional equity report in the mail, into your hands, so that you guys can go through it and you'll have the data, the insight, and if you want to talk to us about the strategy to make good decisions and use real estate to build transformational, generational wealth. I'm Walter Susevich. We're Sanford Surrounded Real Estate, who helps you with your home matters.